Hello and welcome. Welcome to the session today. Let's wait for about 3 or 4 minutes and then we start off. Let's wait for everyone to join. And then we start off. Let's wait for about 2 or 3 minutes. Then we start off. Hi, welcome. Let's wait for about 2 or 3 minutes. Let everyone join in and then we start the session today. Hi Rohit, how are you? Nice to see you. Hmm. Let's wait for 2 more minutes. All right. Let's wait for 2 more minutes. Let everyone join in and then we start the session. All right. All right, that's sweet of you, Rohit. Thanks for your blessings as well. Yeah, let's wait for now 2 more minutes. Come on, everyone, quickly join in. Let's wait for just 1 more minute and then we start. Okay, so who else is there along with Rohit in the session? Rohit and all right. Welcome to Unacademy, India's largest online learning platform that provides a world of courses, resources, content, live and recorded sessions to help you in your preparation for the CA Foundation and intermediate examinations. I'd also like to welcome you to crack CA exams with us. That is the channel and vertical of Unacademy that caters to the students of CA Foundation and intermediate in their journey and preparation for the CA Foundation and the intermediate examination by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. I welcome you to this session once again. Okay, before we proceed, a brief introduction about the educator today. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and an associate member of the Institute of Company Secretaries of India, along with being a law graduate from Karnataka State Law University. I'm currently a practicing chartered accountant and also a visiting faculty for CA subjects and an educator for CA students, both offline and online. Prior to starting on my own, I worked with SR Bartley Boy and Associates, that is the Indian member firm of Ernst & Young Global, in the audit and assurance department. Then I went on to work with Ernst & Young India, EY India, in the mergers and acquisition department. And then I went on to work with the Manipal Group in Bangalore as the corporate controller of their German entity, German subsidiary located in Frankfurt, Germany. And it was only after I got back from Frankfurt, Germany, that I decided to start something on my own. And that also gave me an opportunity to become an educator, which in turn has given me this opportunity today to take this session for you young, fine and enthusiastic CA aspirants. Thank you so much for giving me this opportunity, and I hope you find the session useful. Anytime during the session, in case you have any questions, queries, observations or discussions to be made, please do not hesitate to drop in a line and I will take up the matter for discussion or for problem solving as soon as I can. All right. So once again, thank you so much for giving me this opportunity, and I hope you find the session useful. I'd also like to mention that yes, you can look me up with this name, Prathik Gupta, Prathik, on YouTube to go through all my sessions on the YouTube channel of Unacademy that I have taken, which will help you in your preparation for the CA Foundation and intermediate examinations. With this name, that is Prathik Gupta, Prathik, you can also look me up on the Unacademy Learning app to find all my special classes there, which will help you in your preparation for the CA Foundation and intermediate examinations. All right. Now, like I told you, Unacademy caters to you in your preparation for the CA Foundation and intermediate examination to 3 platforms, that is YouTube, Special Class and Plus. Now, while YouTube and special classes are absolutely free of cost, but they provide you immense resource and value to help you in your preparation for the CA Foundation and the intermediate examination. The Plus course is the premium platform of Unacademy, which is also a payment-based subscription model, more about which I will tell you as we move on. Let's start off with YouTube. YouTube is what you're watching right now, which is just like your normal YouTube. There you need to just go and type in Prathik Gupta, Prathik, and you'll find my sessions. Special classes are on the Unacademy Learning app. They are also free of cost, and more about how to view them and how to access them I will tell you as we move on. And let's talk about the Plus course. Now, the Plus course of Unacademy is the premium platform of Unacademy, which is a payment-based subscription model. Now, I strongly recommend and encourage you to become part of the Plus platform of Unacademy due to the following reasons. Firstly, the Plus platform of Unacademy conducts daily live classes where you get to chat with your educator, engage in discussions, ask your doubts and answer polls, all this while the class is going on. Yes, you heard it right, all this while the class is going on. You do not need to wait for the end of the class. You do not need to wait for a couple of days after your class. You do not need to wait for the weekend after the class. Neither do you need to take an appointment with your educator. You can clear your doubts and have discussions with them then and there on a real-time basis. It's as simple as lifting your hand up in a classroom and your educator will take up your question or topic for discussion or problem solving, as the case may be. The second reason why I strongly recommend and encourage you to become part of the Plus platform of Unacademy is because of the live tests and quizzes it conducts on a regular basis to help you evaluate your preparation and also analyze your performance. Now, you might ask me, why is this evaluation of preparation and analysis of performance important? Please remember, whenever you're preparing for a professional examination, you need to take stock of your preparations from time to time as to which areas you have prepared well, which areas you still need to prepare, which areas there is a lot of preparation left, and which areas you might require external help. So basically, the Plus platform of Unacademy helps to break your preparation into three areas. That is your strong areas, your not so strong areas, and your weak areas, so that whatever limited time you have for the preparation of your examinations, you can use them accordingly on those three areas. In the sense, less time on your strong areas, a little more time on your not so strong areas, and most amount of time on your weak areas, until a time when you reach where your weak areas and your not so strong areas eventually become your strong areas. Thereby, the Plus platform of Unacademy ensures minimum wastage of time and maximum utilization of your time. The third reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the structured courses it provides. All the courses are structured in line with your exam syllabus to help you best prepare for it, which simply means that all the courses on the Plus platform of Unacademy are prepared keeping in mind your exam syllabus. And once you complete any Plus course on the Plus platform, you can rest assured that you have completed the syllabus of your examination without missing out on any important or major point. And lastly, and most importantly, the one subscription to the Plus platform of Unacademy gives you access to all the live and recorded courses to watch from the comfort of any of your devices, which means that once you enroll onto the Plus platform of Unacademy, you get access, unlimited access to all the live and recorded special classes and all the live and recorded Plus courses to watch from the device of your choice, which means you can watch the Plus course or the special classes, as the case may be, from your mobile phone, laptop, tablet, or your desktop, as the case may be. You can view those sessions 24/7 without any timing restrictions like 10 to 5, 10 to 6, 10 to 8. Anytime you find the time, you can just pull out your mobile phone from your pocket, log into the Unacademy learning app, and start your preparations. And not only this, all these information and resources are available to you at any location, which means you can view these sessions from your home, when you're traveling back home from work, when you're traveling to work, or when you're waiting for someone for a meeting, or you are in your native place, or you're on a vacation and you have the time to prepare for your examination. You can just pull out your mobile phones, log into the Unacademy learning app, and make use of all these resources to help you in your preparation for the CA Foundation and Intermediate examinations. All you require is a good internet connection or data plan, which all of us are blessed with today. So keeping these advantages out of the many other advantages of the Plus platform, I strongly recommend and encourage you to become part of the Plus platform of Unacademy in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. All right, please take about 30 seconds, go through this slide. Any questions, please ask me. Any questions, please ask. Okay, now, like I told you, the Unacademy Learning app gives you access to all the live and recorded sessions of the Plus platform of Unacademy. For all those of you who have downloaded the Unacademy Learning app and are using it, I thank you very much. And for those of you who have not yet downloaded the Unacademy Learning app, I request you to go to your Play Store, download the Unacademy Learning app, put in your mobile number and register on it. And it's as simple as that. There is no complicated or lengthy procedures to register on the Unacademy Learning app. Now you might ask me, okay, so you've downloaded the Unacademy Learning app, registered on it, so what next? What do you get from it? So once you register on the Unacademy Learning app, you get unlimited access to all the live and recorded special classes that Unacademy has to provide to you. And you also get access to all the live and recorded Plus courses that Unacademy has to offer to you in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. Okay, so I request all of you to download the Unacademy Learning app, make use of it, register on it, and start using all the resources available on them to help you in your preparation. Yes, Rohit, just about 2-3 minutes. This is mandatory. Okay. Yes, and I also request you to spread the word around to help the people around you to get onto the Unacademy learning app. Help them download it, help them register on it using their mobile number and OTP, and make use of all the resources that are there on the Unacademy learning app. Please take about 30 seconds, go through this, and then we proceed. Any questions? Okay. Now, like I told you, the Plus platform of Unacademy is the premium platform of Unacademy, which is also a payment-based subscription model, which has various subscription packages for the examinations of your choice. So accordingly, the CA Foundation and Intermediate subscription packages provided by the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package costs you about 3,500. The 3 month package costs you about 8,750. The 6 month package costs you about 14,000 rupees. The 12 month package costs you about 17,500, and the 24 months package costs you about 21,000 rupees. Now please remember, this is the listed price. Before you make the payment of the package of your choice, please do not forget to use the code Pratik to get an instant discount of 10% on the above listed price. I repeat, please do not forget to use the code Pratik, P-R-A-T-H-I-K, that's me, to get a discount of 10% on the above listed price. So the after discount price of the various packages are as follows. The 1 month package will cost you rupees 3150. The 3 month package will cost you rupees 7875. The 6 month package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see, immediately you get a savings of 10% when you've used my code. Now I strongly recommend you to start off with a 12 months package, at least due to two reasons. Because firstly, it is cost effective. If you compare the 1 month package cost with the per month cost of the 12 months package, you will see you're getting great savings immediately. And secondly, and most importantly, since the CA Foundation and intermediate courses are provided to you in one package, a 12-month package will be very helpful to you because it covers the entire duration of your courses. That is, the CA Foundation and the intermediate, because normally it takes about a year's time for you to prepare and clear the CA Foundation and the intermediate examination. So if you're getting a subscription package that covers the entire duration of your courses at a very cost-effective price, I think that's a very good deal. But having said this, you're free to choose the package of your choice. But before you make the payment, please do not forget to use the code Pratik to get an instant discount of 10% on the above listed price. You can also use the no cost EMI option for 6 months, 12 months, and 24 months packages, just in case you do not wish to make the entire payment at one shot. The payment options available to you are a debit card, credit card, net banking, and also all the coins that you've accumulated while attending the special classes can be redeemed while making the payment for the Plus course. So keeping these packages in mind and also the advantages of the Plus course in mind, I strongly recommend and encourage you to become part of the Plus platform of Unacademy in order to accelerate and enhance your preparation for the CA Foundation and intermediate examinations as soon as possible. Please take about a minute, go through this, and then we proceed. Any questions, please ask. Take about a minute. Any questions? Take about 30 seconds more. Okay, like I told you, Unacademy Learning app gives you access to all the live and recorded special classes. Here are the snapshots of few of the many special classes that I have conducted on the Unacademy Learning app, which you can make use of in your preparation for the CA Foundation and Intermediate examinations. So I have conducted special classes on the Revision Test Paper, Sale of Goods Act, Indian Contracts Act, Companies Act, Fundamentals of Accounting, Revision on Partnership Accounts, Retirement, Death, Admission of Partner, Valuation of Inventories, revision on final accounts of non-manufacturing entities, and revision on sale of goods on approval or return basis. These are few of the many special classes that I have conducted, which is there at your disposal to make use of in your preparations. All right, so you can make use of these, and also here are the links to few of the many special classes that I have conducted on the Unacademy Learning app. You can either click on these links or you can copy and paste these links on your browser to take you directly to the Unacademy Learning app and my special classes. All right, please take about 30 seconds, go through this, and then we proceed. Yes, Rohit. All right, so let's continue with theory of consumer behavior. Part 4, part 1, 2, and 3 were done in the last 2 or 3 days. And today we will conclude with theory of consumer behavior and start with the next topic, that is supply. All right, so we will not spend too much time on what we've done already in part 1, 2, and 3. We will go directly to where we stopped in the last session. Okay, so all this was discussed in part 1, nature of human wants, comforts, luxuries, necessaries, what is utility, marginal utility analysis, assumptions of marginal utility analysis, law of diminishing marginal utility. This example was taken. Then we have the limitations, then indifference curve analysis, assumptions underlying indifference curve approach, indifference map, the budget line. Oh no, we haven't done that. One second. I think there's some confusion. Just hold on 1 second. Okay, I think we'll start at where we stopped last class. Okay, this is where we stopped last class. We were talking about the limitations of diminishing marginal utility, right? Yes, this is where we stopped. The concept and this thing, large scale investment decisions, right? So now today we need to start off with the indifference curve analysis. Now, what is the indifference curve analysis? In the last section, we have discussed the marginal utility analysis of demand, a very popular alternative and a more realistic method of explaining consumers' demand is the ordinal utility approach used a different tool, namely the indifference curve, to analyze consumer behavior. So at one end, we used the law of diminishing marginal utility, which in a lot of ways was impractical and had a lot of unrealistic assumptions. And then we had the indifference curve analysis again, which was used to analyze the consumer behavior. This approach to consumer behavior is based on consumer preferences. It believes that human satisfaction, being a psychological phenomenon, cannot be measured quantitatively in monetary terms, as was attempted in Marshall's utility analysis. In this approach, it is felt that it is much easier and scientifically more sound to order preferences than to measure them in money. Okay, so let's discuss this thing briefly. Now, in the law of diminishing marginal utility and the utility analysis given by Marshall, one of the assumptions given there was that the value of the satisfaction that a particular commodity provides or the wants are measurable in monetary terms. But that turned out to be a very unrealistic approach or an unrealistic assumption, as utility or a consumer approach is a psychological phenomenon. How can you measure it in terms of money? Even what satisfaction a product gives to you, how can you measure it in terms of money? So to overcome this basic limitation of uh, the utility analysis of Marshall, there was another theory called the indifference curve analysis, which was introduced to find out about human approach. Okay, now in this, either rather than giving monetary values to the various wants and other things of humans, it was believed to do it in an order of preference. That is, first I like this, second this, third this, fourth this, fifth this, and and order order the preferences than to measure it in terms of money. Okay, so in this approach, it was it is felt that it is much easier and scientifically more sound to order preferences than to measure them in terms of money. Order preferences like, okay, first I like a mango, then watermelon, then apple, then grapes, then guava, rather than giving monetary values to each of them. Okay, are you clear so far? Then the assumptions underlying the indifference curve approach. The first one: the consumer is rational and possesses full information about all relevant aspects of economic environment in which he lives. So the first assumption based on which indifference curve analysis was based on was that the consumer is rational. Rational means he is well informed. He knows everything about the economic environment around him in which he lives. And once he takes a decision based on being informed about all the economic decisions. So tomorrow he cannot say, no, I was ignorant about this. I didn't know this. I didn't know that. So it is assumed that he's rational and he knows everything. Okay. Second one, the indifference curve analysis assumes that utility is only orderly expressible. The consumer is capable of ranking all conceivable combinations of goods according to the satisfaction they yield. Thus, if he gives various combinations, say A, B, C, D, and E, he can rank them as first preference, second preference, and so on. Okay, so now the second assumption that the indifference curve analysis is based on is that you cannot attach monetary value to any goods or satisfaction it provides, but the consumer, being a rational person, he can, when you give him a choice, he can very easily rank the choice in the order in which he wants. Okay, first I want this, second I want that, third I want this, fourth I want this, fifth I want this. So you can know what is his first preference and you can know what is his second preference. Okay, so in indifference curve is based on these. Please take about 2 minutes, go through this. Any questions, please ask me. Okay, go through this, see if what I've explained to you makes sense or not. Any questions, please ask me. Any questions, please ask me. Any questions, please ask me. Let me know once you're done, and let me know if you have any questions. Okay, are we done? Any questions? Okay, next. However, if the consumer happens to prefer A to B, he cannot tell quantitatively how much he prefers A to B. Okay, so this simply says if you give a customer a choice between 5 products A, B, C, D, E, and you tell him to rank it and he makes a decision, then you cannot tell him, you cannot ask him quantitatively, tell me why did you choose A over B, or why did you choose C over D. That is his psychological decision, and that's what he decides or makes a decision. Okay, then the next assumption: consumers' choices are assumed to be transitive. If the consumer prefers combination A to B and B to C, then he must prefer combination A to C. In other words, he has a consistent consumption pattern. Okay, so if you give him a choice of 3 products A, B, and C, and if he chooses A over B and B over C, then you can very conveniently say that he chooses A over C. It cannot happen that he chooses A over B, B over C, and then C over A. Then he's just going round and round, round and round in the consumption pattern. All right. So the third assumption is he has a consistent consumption pattern, which does not change from time to time. That's the third assumption. You cannot say, oh, half an hour back he had this consumption, now he has that consumption. So the third assumption is he has a consistent consumption pattern. Then the fourth assumption: if combination A has more commodities than combination B, then A must be preferred to B. All right. So if a particular combination of what the particular customer has selected, if that has more commodities than the other combination, then A must be preferred to B. So obviously it's been assumed that the customer will choose that combination which has more commodities or more number of commodities in that. So these are the 4 assumptions based on which the indifference curve is created or is resting. Okay. Now let's look at what is indifference curve. What are indifference curves? The ordinal analysis of demand. Here we will discuss the one by one given by Hicks and Allen is based on indifference curves. An indifference curve is a curve which represents all those combinations of 2 goods which gives same satisfaction to the consumer. Since all the combinations on an indifference curve give equal satisfaction to the consumer is indifferent among them. In other words, since all the combinations provide the same level of satisfaction, the consumer prefers them equally and does not mind which combination he gets. So basically in the indifference curve, we are plotting those 2 combinations of goods which gives the customer the same level of satisfaction. Combination A, combination B. Okay, so both these combinations will give him the same level of satisfaction. And why is it called indifference curve? Simply because if the 2 combinations give the customer the same level of satisfaction, then he will be indifferent towards them. Indifferent means oh, it doesn't make a difference whether A or whether B, doesn't make a difference to me, anything is fine. So for this indifference, it is known as indifference curve. All right, please take about 2 minutes, go through the slide, and then we proceed. Any questions? Please ask. Please take 2 minutes. Any questions? Please ask me. Let me know once you're done. Any questions? Please ask me. Any questions, please ask. Let me know once you're done. Rohit, are we done? Any questions? Okay. Indifference map. An indifference map represents a collection of many indifference curves where each curve represents a certain level of satisfaction. In short, a set of indifference curves is known as an indifference map. So an indifference map is nothing else where a lot of indifference curves are plotted on that map, and then that is called an indifference map. And what is an indifference curve? An indifference curve is a place combination between two goods which give the same level of satisfaction, and the customer is indifferent towards them. Okay, the properties. Now let's look at the properties of indifference curves. The following are the main properties of indifference curves. First one, indifference curves slope down to the right. Okay, so now indifference curve will always flow like this. Okay, towards the right. This property implies that two commodities can be substituted for each other, and the amount of one good in the combination is increased, the amount of the other good is reduced. This is essential if the level of satisfaction is to remain the same on an indifference curve. Like we discussed, on an indifference curve, the level of satisfaction that you get between two commodities is the same. Okay, and as you increase the quantities of one commodity, the quantity of the other commodity will get reduced. Okay, so it will compensate in that manner. This is essential if the level of satisfaction is to remain the same on an indifference curve. Then we have indifference curves are always convex to the origin. It is also observed that as more and more of one commodity X is substituted for another commodity Y, the consumer is willing to part with less and less of the commodity being substituted, that is Y. This is called diminishing marginal rate of substitution. Thus, in our example of food and clothing, as a consumer has more and more units of food, he is prepared to forego less and less of clothing, because obviously he's getting more and more of food, so now he is well fed and he's satisfied, right? So then he will now the next want is clothing, so he's prepared to forego less and less of clothing. All right, so the second point says as a customer gets more and more of one commodity, okay, and then that means he is letting the less he wants to let go of the other commodity which is its substitute. That is the second property of indifference curve. Please take about 2 minutes, go through this. Any questions, please ask me. Any questions, please ask me. Any questions? Please ask me. Any questions? Please ask. Let me know once you're done. No questions? Okay. Then let's move on to the third properties. Indifference curves can never intersect with each other. Okay, so two different indifferent curves will never intersect with each other. Although it is not necessary that they are parallel to each other. In case of intersection, the relationship becomes logically absurd because it would show that higher and lower levels are equal, which is not possible. Okay, so the third properties of indifference curves are indifference curves will never intersect each other. They may not ideally be parallel to each other, but that does not mean that they will intersect each other, because once they intersect each other, then it will become contradictory. That is, the higher and lower levels are equal, which is not possible in indifference curves. The fourth property, the higher indifference curve represents a higher level of satisfaction than the lower indifference curve. Okay, so now please remember, like I told you, indifference curves cannot intersect each other, but there are indifference curves at different levels, right? So a higher indifference curve will show higher satisfaction, and a lower indifference curve will show lower satisfaction. Okay, this is because combinations lying on a higher indifference curve contain more of either one or both goods, and more goods are preferred to less of them. Okay, so a particular indifference curve which is on a higher level will give more satisfaction, and the one which is on a lower level will give lesser satisfaction. Okay, so those are the properties of indifference curves. Then let's move on to the budget line. The higher indifference curve shows a higher level of satisfaction than the lower one that we discussed earlier. Therefore, a consumer in his attempt to maximize satisfaction will try to reach the highest possible indifference curve. But in this pursuit of buying more and more goods and thus obtaining more and more satisfaction, he has to work under two constraints. Okay, firstly, he has to pay the prices of the goods, and second, he has a limited money income which is to be purchased the goods. Okay, so like we said, for any indifference curve on a higher level means higher satisfaction, which has more and more of a particular goods, right? So if any customer has to reach the higher indifference curve, he has to buy more of those products, but there are two constraints he faces. Firstly, he has to pay the prices for the goods that he's buying, and secondly, he has a limited money income which he has to purchase the goods. Okay, so these are the two constraints he has to work. So he cannot keep unlimitedly buying whatever he wants. The two constraints are, firstly, he has to pay the prices, and secondly, he has limited money income in which to purchase the goods. So it's not easy for him to go to the highest indifference curve. A consumer's choice are limited by the budget available to him. As we know, his total expenditure for goods and services can fall short of the budget constraint but cannot exceed it. So the budget constraint is also an important aspect which the customer needs to look into. Okay, please take about 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Take 2 minutes. Any questions, please ask. Any questions, please ask. Okay, are we done? Rohit, are we done? Any questions? All clear? Yes, Rohit? Okay, so in case you're done with that, then we are done with the topic of theory of consumer behavior. Thank you so much for this patient listening for this session. So let's start off with the next one on supply. Okay, so let's start off the next topic on supply. Okay, so we are done with the introduction, demand, supply, consumer behavior, and now we are looking at another important topic of economics, that is supply. All right. Now let's look at the introduction. In the market economy, sellers for products and services constitute the supply side. Okay, so far we spoke about the buyer side and the demand side. Now, whoever supplies is the constitutes the supply side. As the term demand refers to the quantity of a good or service that the consumer are willing and able to purchase at various prices during a given period of time, the term supply refers to the amount of a good or service that the producers are willing and able to offer a market at various prices during the given period of time. So like we talk about demand, demand is the amount of goods or services that the consumers are willing to buy and able to purchase at various prices during a given point of time. Now similarly, if they have to buy it, there has to be someone who's selling it, right? So the people who are selling it are known as suppliers, and the term supply refers to the amount of a good or service that the producers are willing and able to offer to the market at various prices during a given period of time. Two important points apply to supply. What supply refers to what a firm offer for sale in the market, not necessarily to what they succeed in selling. What is offered may not be sold. Okay, so supply does not exactly mean that it is sold. If a particular commodity is supplied to the market, that means it is being offered in the market for sale. Okay, now whether it is sold or not is a different question, but at least it is supplied, right? You have supplied it. Now whether it finds its customers and it's sold, that is a different issue. Then the second one, supply is a flow. The quantity supplied is so much per unit of time, per day, per week, or per year. All right, so it is not a one-off transaction. It is a supply is a continuous flow of transactions. The quantity supplied is so much per unit of time, per day, per week, per year. All right, so per week you supply 100 quantities, per month you supply 3000 quantities, per annum you supply 5000 quantities. So it is a flow. All right, please take 2 minutes, go through this. Any questions, please ask. Any questions? Please ask. Let me know once you're done. Any questions? Please ask me. Okay, shall we proceed? Now, what are the determinants of supply? Okay, so we saw the introduction to supply. Now, what are the determinants of supply? Same way like there were determinants of demand, now we have determinants of supply. Although price is an important consideration in determining the willingness and desire to part with commodities, there are many other factors which determine the supply of a product or service. Okay, so this means even though price is one of the main things that determines the supply, but there along with price there are also various other things that we need to take care of in the supply channel. Okay, now what are those? First one, price of the goods. Other things being equal, the higher the relative price of the goods, the greater the quantity of it that will be supplied. This is because goods and services are produced by the firm in order to earn profits. Ceteris paribus, profits rise if the price of the product rises. So, the first determinant of supply is price. So, the higher the price of a product, the more supply is generated, because simply every firm wants to earn a profit, right? Who does not want to earn a profit? So if the prices are high, it will earn more profits, and it will earn only more profits when it supplies more. So the supplies of goods, the price of which are higher, will be more. Okay, second one, prices of related goods. If the prices of other goods rise, they become relatively more profitable to the firm to produce and sell than the good in question. It implies that if the price of Y rises, the quantity of supplied of X will fall. For example, if the price of wheat rises, the farmers may shift their land to wheat production away from corn and soya beans. Okay, so it simply means, like in the first point, if any commodity has a high price, there will be more profit for that. So obviously, more supply for that will be done. Okay, so similarly, if a firm or a company is producing two products, X and Y, and if the price of Y goes up, so they all will shift their production to commodity Y, and the supply of commodity X will come down, simply because X is giving them lower profits and Y is giving them more profit. So that is how price of related goods is also a determinant of supply. Please take 2 minutes, go through this. Any questions, please ask me. Please go through it aram se. Any questions, please ask me. Go through this. Any questions you have, please ask me. Any questions, please ask. Let me know once you're done. Any questions, please ask me. Okay, shall we proceed? Okay, then what is the next determinant of supply? The price and for factors of production. Okay, cost of production is a significant factor that affects supply. A rise in the price of a particular factor of production will cause an increase in the cost of making those goods that use a great deal of that factor than in the cost of producing those that are relatively small amount of that factor. For example, a rise in the cost of land will have a large effect on the cost of producing wheat, and and a very small effect on the cost of producing automobiles. Thus, a change in the price of one factor of production will cause changes in the relative profitability of the other lines of production, and will cause producers to shift from one line to another, and thus supplies of different commodities will change. Hi Vaibhav, how are you? Welcome, nice to see you. Okay, so the third factor of production of supply is price of factor of production. So in this given example, they've used land, but let's say a particular industry is heavily reliant on labor for its production, and the labor cost suddenly goes up. The labor, everyone go on strike and this thing, and the labor cost goes up. If the labor cost goes up, then please remember your cost of production also goes up. Then the company or the firm or the organization will have to look for alternatives where their cost of productions can be lower. So if a particular factor of your cost of production, the price of which goes up, your overall cost of production also will go up. So similarly, in the example of land, if the land cost of land goes up, then the cost of producing wheat will become expensive, but it will have a very small effect on the cost of producing automobiles. Okay, then the fourth point is state of technology. The supply of a particular product depends upon the state of technology also. Inventions and innovations tend to make it possible to produce more and more better goods with the same resources, and thus they tend to increase the quantity supplied of some products and to reduce the quantity supplied of products that are displaced. Availability of spare production capacity and the ease with which factor substitution can be made, and the cost of that substitution also can be determine supply. Okay, so this simply means that today, with the advent of technology and other things, it is very easy to do a lot of research and development and technological factors to reduce the cost of production. So if we reduce the cost of production of one particular commodity, we can always move to that commodity from the others and move to other commodities as the case may be. Okay, I'm good, Vaibhav. How are you doing? That's okay. All right, please take about 2 or 3 minutes, go through this. Any questions, please ask me. Vaibhav, Rohit, go through this. Any questions, please ask me. Not Ronak, Vaibhav, it's Rohit. Take another 2 minutes, go through this, and let me know once you're done. Any questions, please ask me. All right, take 2 more minutes, go through this. Any questions, please ask me. Let me know once you're done. Any questions, please ask. Okay, what about Ronak? What about Vaibhav? Any questions, Vaibhav? Let me know once you're done. Okay, then we have the fifth factor, determinants of supply, government policy. The production of a good may be subject to the imposition of commodity taxes such as excise duty, sales tax, and import duties. These raise the cost of production, and so the quantity supplied of a good would increase only when its price in the market rises. Subsidies, on the other hand, reduce the cost of production and thus provide an incentive to the firm to increase supply. When government imposes restrictions such as import quota on inputs, rationing of input supply, etc., production tends to fall. Okay, so now government policy. Now the government from time to time introduces a lot of taxes, a lot of duties on a lot of goods. So whenever the government imposes these taxes and duties, please remember the price of the goods goes up, the cost of the goods goes up. So if the cost of the good goes up, then supply becomes a problem, and the supply can be done only when the prices also are correspondingly increased. Okay, so similarly, when the government gives a subsidy to these organizations, subsidy means a grant or a financial help. In that case, it helps to reduce the cost of production, and so there is more supply. Okay, so when government imposes restrictions such as import quota on inputs, rationing on input supply, production tends to fall. Then the next factor, nature of competition and size of industry. Under competitive conditions, supply will be more than the under monopolized conditions. If there are a large number of firms in the market, supply will be more. Besides, entry of new firms, either domestic or foreign, causes the industry supply curve to shift rightwards. So the more competition is there in the industry, the more supply there will be, simply because everyone wants to do better than their competitors, right? So if the competitors are more, the supply of that product in the market will be more. But if the competition is less and it is a monopolistic economy, in that case the supply will be less. Other factors, the quantity supplied of a good also depend upon government's industrial and foreign policies, goals of the firm, infrastructure facilities, um, natural factors such as weather, flood, earthquake, and man-made factors such as war, labor strikes, communal rights, etc. So if there are these factors that happen, weather, flood, earthquake, man-made factors, war, then it affects the supply of these goods as well, as supply comes down during that period. All right, please take about 2 minutes, go through this. Any questions, please ask. Any questions, please ask. Please take about 2 or 3 minutes, go through this. Any questions, please ask me. And Rohit, Vaibhav, I saw that you did not follow my profile on the Unacademy Learning app. Huh? So I request you, in case you found my sessions useful, please do follow my profile on the Unacademy Learning app. All right? Let me know once you're done. Any questions, please ask. Yes, Vaibhav, are you done? Rohit is done. Okay, okay, Vaibhav. Looks like Rohit does not want to do it. That's why he's avoiding the question. All right. Just kidding, Rohit. It's okay. If you feel like doing it, please do it. Okay. Any questions, anyone? Okay. Now let's look at the law of supply. We saw the determinants of supply. Now let's quickly have a look at the law of supply. Okay, what does it mean? This refers to the relationship of quantity supplied of a goods with one or more related variables which have an influence on the supply of the good. Normally, supply is related with price, but it can be related with type of technology used, scale of operations, etc. Uh, The law of supply can be stated as other things remaining constant. The quantity of a good produced and offered for sale will increase as the price of good rises and decrease as the price of goods falls. So we read this a couple of slides back as well, right? No, it's not reflecting, Rohit. That's why. Anyway, okay. Now, firstly, the law of supply means that the supply of a particular goods or commodity increases as the price of that good rises, and the supply decreases as the price falls. Now, why do you think this happens? This happens simply because the firm wants to earn more profits, and if the prices are high, that means more profits. Okay, the law is based upon common sense because the higher the price of the good, the greater the profits that can be earned, and thus the greater the incentives to produce the good and offer it for sale. The law is known as to be correct in a large number of cases. There is an exception, however. If we take the supply of labor at very high wages, we may find that the supply of labor has decreased instead of increasing. Thus, the behavior of supply depends upon the phenomenon considered and the degree of possible adjustments in supply. Okay, so normally, as the price of a particular commodity increases, the supply of that commodity also goes up. That is the law of supply, but there are few exceptions. For example, if the supply of labor at very high wages, we may find that the supply of labor has decreased instead of increasing. Okay, please take about 2 minutes, go through the slide. Any questions, please ask me. Any questions, please ask. Take about 2 minutes, go through this. Any questions, please ask me. Any questions? Okay, in case you're done with this, we will stop this session with this topic and we will continue in half an hour at 10 p.m. All right, so quickly go have your dinner and come back, and then we will continue with this at 10 p.m. All right, Vaibhav, Rohit, I hope to see you at 10 p.m. All right. Any questions here in this? Any final questions before we move on? Vaibhav, Rohit? Because we're just stopping this session now, and the next session will be at 10 p.m., half an hour from now, where we will continue with this topic. All right. So in case you have any questions before we finish, please ask me. Anyone? Vaibhav, Rohit? Any questions? All right. So chalo, I'll see